A few weeks ago, we ran a piece about headaches often created by suppliers, other employees, and managers for the accounts payable staff. We asked if you had any others that we hadn't discussed, and you told us about it in droves. In this episode, we take a look at some of the more prominent ones, the ones that you, the audience, reported to us. Make sure you stick around to the end because the last one is a real doozy, and not only does it cause extra work for your accounts payable staff, but more importantly, it can cost your organization big time. Hi, guys. I'm Warren Schaefer, founder of AP Now, the place where you go for the latest business intelligence if you work in, manage, or have responsibility for the accounts payable function. So let's start off with the headache number one, if you will, or 8 or 9, depending upon how many we had in that other video. And this is when employees outside accounts payable code invoices to inactive cost centers, and then it's left to the accounts payable staff to have to go and correct the coding and get it coded to the right GL code so that it gets coded to the right project. Okay, and that is related to the second area that causes a lot of aggravation, and it's another coding error. In the first one, sometimes the employee who was doing the coding may not have realized they were coding it incorrectly. But in the second example, the employee who's doing the coding knowingly codes it to the wrong GL center, and they do it for one very simple reason. They're over budget or almost at their budget limit in the GL code where it's supposed to be coded. So they put it in another GL code where it's under budget, and they hope then that it will fly through when you're comparing budgets to actuals, and nobody will notice that they actually overspent on a particular project. They don't want to have to explain it, okay? And as you know, if you work in accounting or accounts payable, that's a no-no. Okay, headache number 3. This is purchasers who insist that vendors send the invoice directly to them rather than accounts payable. And the purchasers who ask that suppliers do this, they have a number of reasons. They want to know what's going on, a whole bunch of stuff. That's nice, you know what? But what actually happens in real life is the vendor goes ahead and sends the invoice as they were directed by the purchaser. And then the purchaser gets it, and many times forgets to send it down to accounts payable for payment until either right before the due date or even worse, after the due date when the supplier's calling up looking for their money. And then there's a big, hoop-de-doo. Everybody's running around, oh, we need a rush payment. You got to get these guys paid quickly. Why? Because you asked for the invoice when you weren't supposed to have it. So you want to greatly discourage purchasers from doing that. As a best practice, vendors should be directed to send invoices directly to accounts payable so that they can be processed in a timely manner, and they will be sent to the purchaser for approval if he or she is supposed to get it. So best practice when it comes to invoices and where they're sent, accounts payable departments, best practice accounts payable departments know that they should have 3 addresses set up: a postal address, an email address, something like invoices at ABC Company, and a fax number, which hopefully is married to an e-fax facility. So when that invoice is faxed in, it is automatically turned into an electronic document and emailed to the company, and then they can process it from there. But they should not be sending it directly to the purchaser. Okay, now we know also that sometimes what suppliers will do, and this is not purchasing's fault, is they will send the invoice, especially if they're emailing it because it's so cheap to email, they'll send it to several places. They'll send it to that address you set up in accounts payable. They'll send it to purchaser. They'll send it to anybody they can think of at the company because it doesn't cost them hardly anything. And then accounts payable ends up with multiple copies of the invoice, and that creates extra work for them to weed it out so they don't make a duplicate payment. Hopefully they don't make a duplicate payment. Okay, next one. I could talk about that for quite a while, but I'll spare you. Purchasers who do not follow the no PO, no payment policy and arrange for goods or services from a vendor. And then when the vendor, sends the invoice and there's no PO, the accounts payable department is left trying to explain to the vendor why they either can't pay without the purchase order, or they're left running after whoever the procurement professional is trying to get the purchase order. And this creates a lot of anguish, a lot of extra work, because they're still going to request the purchase order. Now, sometimes folks will say, okay, you got the goods. Here's the invoice. Yeah, just go ahead and pay it. Why don't you? What are you making such a big deal? Why do we have to create the PO? And the answer is because that's the right way to do it, number one. And number two, don't give them the invoice to create the purchase order. And sometimes purchasing, when you won't give them the invoice to create the purchase order, will get really angry and they'll be like, why won't you give it to me? And the answer the reason why you won't give it to them is if you give them the invoice and they create the purchase order from that invoice, if there are any mistakes on the invoice, like the price is too high, then that will be carried on to the purchase order. And then when AP does the three-way match, of course it's going to match. It was created from it. So you don't want to do that. So you want to, I hate to say train purchasing, because you hate to, talk about training employees and something like this. But really, if your company has a policy that they need to have a purchase order, then they need to have a purchase order. Okay. Now we've got two more issues. And as I said, one of them could cost your organization right off the bottom line. But before we get to that, I'd like to invite you to hit the subscribe button. It's free, completely private, and you can unsubscribe at any time if you want. And by the way, if you're watching this on YouTube, hit that bell next to the subscribe button and you'll notify when we post new accounts payable content, which we usually do on Tuesday and Thursdays. And by the way, on some Saturdays, we're now posting Wordle content if you're interested in that. Best of all, on YouTube, you can subscribe if you have a Gmail account. You don't have to have a YouTube account. Okay, the next two and really aggravating ones. And we're blaming them on purchasing because that's what was reported to me. Okay, this is purchases who make promises to suppliers that go against company policy. So for example, if your payment terms are net 30 or maybe 210 net 30, and the supplier does not want to take the early payment discount, they may call up and say, oh, you know what? So-and-so in purchasing said you pay me in 15 days instead of 30 days. Now, when that happens, it's one of two things. Maybe purchasing did make that promise to them, in which case you have to go and have a talk with the purchasing and tell them, no, we're not going to do that, and then apologize to the vendor for this bad promise. And you want to make sure that the people in purchasing understand not to do it again. And if they do it on a regular basis, now they're not only wasting your time, they're fraying vendor relations. You might have to get somebody involved at a higher level. But sometimes it's just the vendor trying to squirm around and get paid earlier. And when you go to talk to purchasing, they're like, no, we didn't tell them that. We wouldn't do that. And typically, by the way, when you get these calls and they tell you so-and-so in purchasing, you know whether they really did it or not. But you can't accuse. You need to go and double check before you say, no, they didn't. Okay, you need to verify it for them. Okay, now the last one, okay, this is kind of interesting, but if you don't follow this completely and your staff doesn't do it, it will come money right off the bottom line. It happens most frequently, by the way, at year end. And this is when your vendors, your suppliers, some of your suppliers will come and they need to make a sale. Either the salesperson wants to get the sale in the book so they can get a big bonus, or they're trying to make numbers. And when they're trying to make numbers, it's most usually at year end, but it can happen at quarter end. So the the vendor comes and they're selling whatever they are, and your company doesn't need it, and so they're saying no. And they'll say, okay, if you order it now, you don't have to pay for it until, instead of 30 days, let's say we have 30-day terms, 60 days, 90 days, 120 days, or maybe they give you a slightly lower price, whatever. Better payment terms or a lower price. And whatever, your purchaser isn't a fool, and they do the little analysis and they realize, yeah, this is a great deal. Let's go ahead and take it. And so they do. So they make the deal. Unfortunately, when they write up the purchase order to go along with this, they just tick the box that says standard terms and conditions. And the supplier when they go to prepare the invoice, they forget about this, and they prepare the invoice at the normal payment terms and price. So when the invoice gets to AP, they match it against the purchase order. They have no way of knowing, because nobody documented it, about this special deal. So they go ahead and pay the full price, or they pay within the payment terms. So this great savings that you think your company, that the purchasing person thought their company was going to get, goes down the drain because nobody documented it, nobody told AP, and conveniently the supplier forgot to put it on the invoice. Now, you're saying, if you're thinking to yourself, that doesn't happen, it's big, this is a big practice, will happen in the pharmaceutical industry. And I know of one case where the company actually went back and looked at all its invoices and did a little study. And guess what? None of the suppliers put it on their invoices, and their purchasing person didn't put it on any of the purchase orders. And so the company went ahead and took all this extra goods early and didn't get any benefit from it. They paid for it. So be very careful. And again, depending on your industry, but especially at year end, whatever your fiscal year end is, and also not so much only your fiscal year end, but what your vendors, your suppliers, what their fiscal year end is. So, in this case, those big savings right down the drain. Okay, these issues are just the tip of the iceberg and represent some of the many different areas that you need to be knowledgeable about if you work in AP. We discussed some more of them in episode 115, and we've got a link to that down in the show notes, as well as a link to the original program when we talked about the original headaches. And again, if you have any more, please put them in the comment field. On YouTube, a link will appear to these on the left. And as always, I greatly appreciate those thumbs up, those comments, those shares, and those subscribes. Good luck.